From FXEmpire, this is Chris taking a look at the Australian dollar. The Australian dollar has been dancing around the 0.65 level. This is an area that has been important multiple times, and the fact that we continue to consolidate in this area does make a lot of sense that we are observing a lot of market memory. After all, it's an area that previously had been significant resistance previously. Now it's significant support. And of course, we have the 50-day EMA breaking down below the 200-day EMA, kicking off the so-called death cross. Ultimately, I think this is a situation where we are trying to sort out whether or not this area is going to hold. But given enough time, I think a lot of this comes down to the central bank action, especially the Federal Reserve. After all, the U.S. central bank, the Federal Reserve, has been very cognizant of the fact that inflation continues to be a major issue in the United States. So therefore, the timeline of interest rate cuts has been pushed back, and therefore we've seen the Australian dollar suffer a bit. If we do break down below the 0.6450 level, then I think the Aussie drops towards the 0.63 level. If we turn around and rally, that 50-day EMA and the 200-day EMA both come into the picture as resistance. If we can break above the 0.66 level, then we could go to the 0.67 level. But it is a bit like swimming upstream at the moment. In general, this is a market that will continue to be very noisy, but it also is a market that short-term scalpers will probably love, as it is so well defined as far as having an area that is a bit of a fulcrum point, namely the 0.65 level.